Hey everyone, Jay Alexander here with Homestar Financial. Wanted to just actually put together a video to go through some of these FHA changes and explain how it all works. I'll be honest with you, I was trying to type up an email, but it was taking too much time. For those of you who don't know, we'll just put it on the video here. I actually fractured my elbow this weekend at an obstacle race, and so I'm typing one-handed, and too many details to try to fit all in one email, too much detail, I guess, to fit all in one email. So unfortunately for you, I guess you have to watch this video instead of reading an email. I apologize for that. Actually, my arm was feeling better until I read this new letter that came out. So don't blame me, blame FHA. We'll go with that. Anyway, this is the letter that they sent to us yesterday. It was published yesterday by FHA. Want to hit some highlights in the letter real quick. You're welcome to look this up if you want to Google it. You can probably see it in the video right there. It is FHA info number 19-07. So you can read all this as well if you're interested. The highlights I want to hit is that basically FHA has come out and said that we're closing too many loans that are high risk. And specifically, as far as identifying some risky trends that they don't like, FHA has said there's been an increase in the concentration of mortgages with high debt-to-income ratios. They're saying almost 25% of all FHA-insured mortgages were in fiscal year 2018. So last year, almost 25% were mortgages where the borrower had a debt-to-income ratio above 50%. Okay? And they keep alluding back to previous years. They say that that's the highest percentage since the year 2000. They also say that they're seeing an average decrease in the borrower's credit scores. Their statistic here is more than 28% of new purchase mortgages for the current year, just since 2019, have had credit scores of less than 640, and more than 13% have had credit scores of less than 620. So they're explaining two separate issues. They're saying, first of all, we don't like the high debt to income ratios. Then they're saying, secondly, we don't like the low credit scores. And then finally, number three, they say we see a concentration of loans where credit scores are less than 620 and we have debt to income ratios over 50. So they really don't like having both of them together. Now, this shouldn't be a surprise to anyone. FHA is by far the most aggressive loan program currently with regards to debt to income ratios and with credit. That's why they have these loans. Any good loan officer will tell you the reason these customers that fit in these categories go FHA is because other loan programs don't work. You can't get them approved for those loan programs. So I guess it took FHA a couple years to catch up. I could have told them that several years ago, but it is what it is. So their solution is they published this letter, like we said yesterday night, and they've said effective for all mortgages with case numbers assigned on or after March 18th, which is this coming Tuesday, FHA is updating its technology to where those loans will no longer receive an approved eligible finding, or it's not going to be an automated approval for the mortgage. Okay. Now, this is going to require a little bit of background. If you sat through some of my CE classes, you've heard me talk about this, so just bear with me a second. I think it's very important to understand the difference between an automated approved file and a manually approved file. Okay. In fact, it's such a big difference that when FHA published their new guidelines a couple years ago, they actually split their guideline book in half, and we have a separate set of guidelines for customers who are automated approved, and we have another set of guidelines for customers who are manually approved. Okay, so generally speaking, an automated approved file is a much easier way to get a customer approved. If a customer has an automated approval through the system, and that's the same thing as if you've heard terms like approve eligible or the DU looks good, desktop underwriter's good, that's all the same way of saying that we have an automated approval on a file, okay? When we get an automated approval on a file, all my job becomes then as a loan officer is to verify the information I've submitted to the computer. Make sense? If the customer says they make $5,000 a month, we get a pay stub. Yep, they make $5,000 a month. We check it off the list. Customer tells me they have $10,000 in the bank. We get a bank statement. Yep, they've got $10,000 in the bank. We check it off the list and we move on. Okay. We're not getting a whole bunch of letters of explanation. We're not verifying rental history. I don't care if they went late on their credit card payment a couple months ago. We've got an automated approved finding. We're good. We move forward with the loan. Okay. When the file flips from an automated approval to a manually approved file. Now, there's still nothing wrong with that. The customer can buy a home. They can get approved for a mortgage. But with a manually approved file, everything that we didn't ask questions about in an automated approved file, we now ask questions about, okay? So now we're verifying rent history, we're verifying why the customer went late on this credit card, why something happened that was wrong or questionable in their credit past, what happened, what they've done to improve it, why we don't think it's going to happen again. You get the idea. It's a lot more, I guess intrusive would be the correct word. And there's a lot of additional documentation required to get those loan files approved. Additionally, the guidelines in general are just much stricter for a manually underwritten file. We can't go near as high on the debt to income ratios, the money the customer has in the bank. We have some reserve requirements, things like that, okay? Now, that's the difference between an automated approved and a manually approved file. What this bulletin from FHA is essentially saying is that some of the customers who previously would have gotten the automated approval now will have to go through the standard manually underwritten guidelines, okay? Where this is a challenge is they're explaining, so we have an idea of what it's going to be, right? They've alluded to the fact that, okay, it's high debt to income ratios, low credit scores that we're going to see these changes on. The problem is, even though we know how it's going to affect the group as a whole, I mean, this is a big section of the market. They said almost 25% of every FHA loan that closed last year had a high or a debt to income ratio over 50%. So we're talking about 1 in 4 customers that this could potentially affect. The problem is, even though we know it will affect a bunch of people, I have no idea how it's going to affect my individual customers or your individual customers. Make sense? Because we don't have access to this new total scorecard. We don't have access to this new engine they're going to be running people through come Tuesday. So the only way I can set expectations with a customer, and the only way you can set expectations with a customer, is that, hey, come Tuesday, the approval that you have or the amount you've been pre-approved for may change. We don't know. It may not change. I like to be optimistic. Maybe it will increase. But realistically, it may go down, or you may not be able to get approved at all, okay? So that part is really concerning. We can say, hey, it's going to change, but we don't know how it's going to affect customers, or won't have any data on that until Tuesday. Now, as far as, advising your customers, or how do we move forward, or how does this affect your business, I've got some notes here I want to go over. The first thing I would say is, for any and every customer that you have under contract, you need to get on the phone, whether you're the listing agent or the buyer's agent, call the lender and verify that they have ordered a case number, that they've received a case number, and that the case number is good and valid and they intend on closing the loan with that case number, okay? As long as the case number is ordered before Tuesday, we're still going to be using the same underwriting engine that we use today. So the data that we have should be good data, okay? Now, if you have a customer who's currently looking for a home but they're not under contract, the problem with FHA case numbers is we can only order a case number when the customer has a home under contract. This is also something to think about. If you have a customer who's under contract, but maybe the inspection's marginal, or they're thinking about backing out of the deal if they're still in their due diligence or something like that, well, the next home they get under contract, there's a good chance that that loan program is going to change, right? They're probably going to be pulling a case number after March 18th. So that could affect those customers, even if they are under contract, if they elect to move properties, okay? So heads up on that. So that's the best way you can set expectations with customers who are under contract. Call the lender, verify the case number is ordered. If they say it hasn't been, pester them until they get it done. Send them a link to this letter. They should have it already. There'll be a link in this information here, but definitely make sure those case numbers are ordered, okay? Step number 2 is going to be, if you have customers who are pre-qualified to go FHA, but they're not currently under contract, well, my first question would be, can they go under contract this weekend? Heads up, when I say we, all lenders use the same system to order FHA case numbers. And I have a feeling, as a result of this bulletin right here, that we're going to see a whole bunch of people ordering case numbers this weekend into Monday. And hey, it's a government website and it tends to crash from time to time, okay? So, if you have a customer go under contract Monday night at 8 p.m., that's great, but we may not be able to pull a case number on that customer before the Tuesday changes happen, all right? So the sooner the better on that, but certainly if we get a customer under contract, we can be a little bit more just firm with the pre-approval that we have for that customer. If they do not have a contract by Tuesday, then I would encourage you to tell every customer who's pre-qualified for an FHA loan that they need to get pre-qualified on Tuesday, all right? Have them call up the lender, hey, there were some changes. My agent called me and said I needed to call you. Does this affect me? We can sit here and guess all day about who this will affect, but again, until we actually have the ability to run this new system, we're not going to know. And I think it would be very smart to have every customer you have talk to their loan officer and redo their pre-qualification. Doesn't mean we have to re-pull credit, but we do need to rerun the automated underwriting engine to make sure that file will still work and work as we intend it to. The other thing to know about manual underwrites, because it is such a different loan program with a different set of guidelines, I know of companies and loan officers specifically that will not close manually underwritten files. Okay, so this is a good time to know. Obviously, we at Homestar close manually underwritten files. I do it, every day, but I think it's very important to have a referral partner or a resource that you can refer people to that offer manually underwritten files in case you have a customer that gets caught up in this and they need a manual approval versus an automated approval if they're affected by this change that's coming out on Tuesday. All right. So again, if they're not under contract, have them get pre-qualified on Tuesday or later. And then the last thing is, as far as moving forward in general, right? I mean, this is just a general change in the guidelines. I would encourage you, it's probably a good thing to do anyway, but to be even more diligent about this in the future, come Tuesday or later, is to ask even more questions of the lender to make sure you understand what's happening with the file. If you've sat through my CE classes again, I tell people, especially listing agents, if you receive an offer on a property, always call the lender and specifically ask them, is this file a manually approved file or an automated approved file? Okay. I would encourage buyer's agents to ask that question. Hey, I've got this pre-qual letter. Is this manual or automatic? Have you ran it recently? Are you aware of the new changes? Again, every lender should be aware of these new changes. It's not like FHA's hiding it. They've published it. But let's be honest, it's the mortgage business. Things change a lot, and it's easy to miss something or things to get caught up, especially if someone was planning on, I don't know, having a day off on Friday today or something like that. So definitely ask questions, and the more we can communicate this, y'all, the more we can get it out to every lender, every customer, every agent. Let's get it out there. If you've been in real estate more than 3 or 4 years, you've already lived through the TRID changes that we had, changing the disclosures that we use from the HUD ones and the good faith estimates to what we have now. You've lived through the new FHA changes with the new rule books that we have. And we can get through this. It's not something where it's going to crash the business or make real estate something terrible to do. At the end of the day, I love real estate. I hope you do. I think we are in the best industry and the best business in the world. I'm not just saying that. I really believe that. But anytime there's something like this that happens, I think the best thing for the industry is that we all talk. We all understand what's going on. What are you seeing? I encourage you, share this video or, copy the information, make your own video, send it out, send out an email. Let's just get the information out to our customers. Let's get it out to the other agents, other loan officers that are out there, because at the end of the day, we're really all in this together. Certainly, if you have any questions, you can always email or call me. I'll have all the information here. The phone number is 404-409-5784. Otherwise, I hope you all have a wonderful weekend. I hope you have a great St. Patrick's Day. Even more than usual, it's a great weekend to write a contract on the house because of these changes. But again, I hope everyone has a wonderful weekend. If you need anything, please feel free to reach out, even if it's not my transaction, y'all. I'm happy to answer any and all questions you have. And again, look forward to speaking with everybody soon, and y'all have a wonderful weekend.